This is the Investor Connect podcast program. I'm Halti Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Interested in learning more about investing in startups, launching a new startup and need to raise funding? The Startup Funding Espresso is a daily podcast in a short, concise format delivered to your inbox every day, Monday through Friday. In the time it takes to drink an espresso, you can learn about startup funding. To subscribe, go to investorconnect.org and put your email into the pop-up box. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Wes Barton, managing partner at Third Prime. Third Prime is a venture capital firm focused on identifying and investing in seed stage companies that are using technology to develop business models with the potential to disintermediate incumbents within the fintech and proptech sectors. Wes, thank you for joining us.
Great to be here.
So tell us more about your background. What did you do before investing in early stage companies?
Yeah, well, I like to joke that I think I'm the first farmer turned venture capitalist. Grew up on a little farm in Kentucky. Made my way to New York City, started my career as a M&A lawyer with Skadden Arps there, and practiced law about 3 years. Before recognizing I wanted to, get to the investing side. Did a short stint, with B of A in their investment bank up in New York, and then about a decade in sort of private equity and hedge fund work. Started angel investing in about 2010. And had the good fortune of compiling a track record that I was able to sort of parlay into launching Third Prime with my co-founder Keith Hamlin. And fast forward to today, we've got almost $250 million under management now across 3 funds. And just feel privileged to get to do this every day.
Great. So, what excites you right now?
Continue to think there's a lot of opportunity in fintech, as well as prop tech, which is really where we focus. With respect to fintech, think there's a lot going on with sort of decentralized finance as well that affords a lot of opportunity. So we've actually stood up a dedicated crypto fund as well as our third flagship fund to capitalize on those opportunities.
Great. Well, you see a lot of startups and a lot of investors out there. What's your advice for people investing in startups? What do you tell them to do before they write that first check?
Yeah, look, I think it's a real apprenticeship business. What I would say is don't put all your chips, on the sort of the first interesting deal you see. I do think that, it's important to build a, portfolio. If you're really sort of going for, companies that can, be sort of decacorns, $10 billion companies, there's a lot of risk involved. And so, you got to anticipate there's going to be some losses along the way. And I think it's just going to be important to sort of, make sure that you're, constructing a portfolio that's going to get you good exposure to this asset class and, hopefully hit a couple of good ones out of that.
Great. Then on the other side of that table, what's your advice for startups? What do you tell them to do before they go out to raise funding?
It's a good question. What I would say is make sure you're incredibly passionate about, going on this journey. It's, very difficult to be an entrepreneur. The successful entrepreneurs that we've, had the good fortune to work with, they're just incredibly driven, it's just their life's mission to, sort of solve this problem, for a customer base or sort of build this product. And we find that that's just, tremendously important, as you hit these inevitable bumps in the road, and you got to have, just have to have the perseverance to keep on.
Great. Well, let's talk about the state of startup investing. How do you see the industry evolving from here?
Yeah, so it's quite competitive. We started doing this full time in 2016, and I can say that we've seen the number of competitors increase meaningfully. Valuations as a result have moved higher. The fact that we are generally sort of investing at the earliest stages, typically going to be the first institutional check, leading seed rounds. I would say that the valuations have not sort of increased as meaningfully in that arena as they have, sort of at the Series B and sort of C rounds. In fact, I think there's a decent arbitrage opportunity today, given sort of the way that the valuations have moved a little bit later stage. That if you get a company that's really starting to, take off, we've seen that, they can, 15, 20, 20x sort of in valuations, in a year's time, just because you get out there and you sort of hit that growth capital, that there's just a tremendous amount of it out there.
Great. And so what do you think is the biggest change we'll see in, say, the next 12 months?
That's a difficult one to answer. I don't know that we're going to see too much change in the next 12 months. I think, we're going to continue to see a lot of capital chasing the best deals. I think we're going to continue to see, a lot of fantastic talent, come into this. When I started my career, I feel like folks aspired to be doctors and lawyers, and, today they aspire to be entrepreneurs. And I think that bodes well for the state of innovation. And so, I think that, given the conversations we're having out there, the way that I think, the market sort of, thinking about the space, I think it's just going to continue to be competitive, and, folks are going to keep building.
Great. And so let's talk about your investment thesis. What is your thesis, and what's your criteria for investing in a deal?
I think it's important to be focused. So as a firm, we're primarily, targeting fintech and prop tech opportunities. We are, looking for those businesses that, have very, very high ceilings. So, if things go well, they'll be worth, billions of dollars. So we think about large addressable markets. We think about structural tailwinds, making sure we're investing, sort of in those spaces that can afford, to have some really outsized winners. Also spend a lot of time thinking about, the founders, that we're going to partner with. You can have the best idea in the world, but, unless you've got, a team that can execute on it, nothing great's going to happen. So spend a lot of time sort of getting to know those founders, really understanding what their motivations are. Look, if we distill it down, I think, the best founders are going to have very high IQ. They're going to be able to sort of see, have some view of the future that I think is, needs to be very powerful, needs to be somewhat contrarian as well. They've got to have very good EQ because, they're not going to be able to do it alone. They're going to have to go build a team around them. They're going to have to be able to motivate that team. They're going to be able to sell a product. So EQ is important. And then finally, it is just grit, that tenacity. This is a 7 day a week, oftentimes, 18-hour a day type job. And we see how hard our founders are working, how motivated and driven they are. And they're just tenacious about sort of building a, very important business. So, like to see sort of all those things, add up. And then, within the fintech and prop tech categories, we spend a lot of time as a firm just trying to think about, the themes that we think are going to be most compelling, and then making sure that we're invested behind those.
Great. And so can you mention one or two startups that fit that thesis, perhaps a portfolio or two?
Yeah, recently invested in a company called Wethos, which is building an operating system for freelancers. So one of those things that we think a lot about are sort of, just trend lines, demographic shifts. And, I think COVID has been a real accelerant in getting folks to contemplate, whether or not they need to sort of stay with their existing 9 to 5. You see the freelancer class growing meaningfully. We feel like that's a trend that's going to continue. When you look at sort of the Gen X, Gen Z, they're targeting, becoming sort of creatives, being on YouTube and whatnot. And Wethos is building, a platform where they can come in, they can scope projects, they, can invoice, customers, they can build what we, sort of define as liquid teams that folks can come together and collaborate on a job, then, go apart and form a different team. So Wethos is really, creating what we think is a really powerful ecosystem for that, that really plays into some of those structural tailwinds that I mentioned earlier. So that's one we're very excited about. Another one is a company called Caffeine, which is sort of in the buy now, pay later space, leveraging sort of, leases as a structure, partnering with merchants, enabling them to, sort of sell more product, and then enabling customers to have a lot of flexibility on sort of how they pay for that product. They have a chance to sort of, take it home and then have 90 days to sort of pay for it. Or they can, extend those payments out over 12 months before they buy a product. So that's just been a space that's red hot, fantastic team there, that's building a lot of unique technology, and we're really bullish on it.
So you see a lot of startups and investors out there. What do you think is the main challenge that startups face in launching their businesses today?
I would say competition, and there is a lot of capital out there, but the companies that sort of get on that venture train, if you will, that are able to sort of be perceived as the winner. A lot of these markets truly are sort of winner take all, or certainly winner take most. And so I think it's often an arms race, to sort of align yourselves with venture firms and sort of get that capital in the door so you can go recruit, bring in the best talent. And really go, sort of go hard to market. So growth is, something that we really focus on. I think obviously unit economics are tremendously important. It's something that we think about a lot, but, first and foremost, you got to go get some scale, right, to build these big businesses. So I think it's going to be important, for, these entrepreneurs to acknowledge the competition, figure out what, sort of the value prop is that they've got relative to that competition, and just think about that sort of positioning in the market.
Then what do you think is the main challenge investors face in today's market?
Back to that competition point, prices are going up. The deals that we, are doing generally have multiple term sheets. So we have to spend a lot of time with those entrepreneurs talking about why they should choose Third Prime, why we think we're going to be the best partner. Fortunately for us, we've now got, about 50 companies in the portfolio. We generally sit on the boards. We've got deep relationships with those founders and teams. And, we sort of let them, really, do a lot of the work, the heavy lift for us. We invite, founders to talk to, the companies that we're invested in, the entrepreneurs that we work with, and hopefully that enables us to prevail on some of these highly competitive deals.
We see a lot of different applications and sectors out there today. If you had to pick one or two to put at the top of the list that are good opportunities to pursue, what would you list up there?
Yeah, look, there's a reason we're raising a dedicated crypto fund. I think blockchain technology is truly transformative. We are talking to entrepreneurs every day. I can tell you that there's just some tremendous talent, building in the crypto space. I generally say, if you're sort of following the talent, you're going to do, quite well as an investor. So really excited about that. I think these are just, there's some really interesting opportunities out there that didn't, exist prior to sort of, the blockchain technologies and whatnot. So we're really, really excited about that.
That's great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
I think we've covered a lot of ground in a short period of time. I'll be happy to address anything else you've got, but I think don't know that I've got anything meaningfully to add.
Great. Well, I had a few questions about the blockchain world. I remember back in 2017 in the era of the ICO and white paper mania that it was just really hard to figure out what was going to be a winner and what was not. When you look at crypto, how do you determine today what you think is going to have legs and gain traction and what is not? Because it still seems like it's still a fairly frothy market.
It is. Look, it's a very fluid market. I think when you're trying to determine which sort of, layer one, all the applications are going to get built on, there's still, sort of debates around that, despite Ethereum being the clear leader now. What we're doing there is taking a pretty, diverse approach, right? So we're, where on the flagship side, we're normally building a portfolio of 20 companies. Here we're putting 50 companies in this portfolio because, again, we feel like that it is a bit more difficult to sort of determine who's going to be the winner in this space. We don't want to over-index to any one geography here, so we're investing internationally on the crypto fund. We've already got investments out of the Philippines, Thailand, Africa, Portugal. Just recognizing there's still a lot of regulatory risk. China just dropped the boom on crypto, a month or so ago. So we're very mindful of that. I think there's going to be a lot of volatility in the space right now. And so what I would say is, for us, the way we think about underwriting, again, trying to bet, the best teams, folks that are very well, well aware of sort of the compliance obligations, or where the regulatory landscape might shift. And then looking for those large addressable markets and really stuff that is going to be, truly enabled only by blockchain technology. Yeah. So, a lot of sort of greenfield opportunities have us very excited, sort of Web3 stuff, creator economy stuff there where sort of value can accrue to the creators, we think is going to be very attractive.
Great. So how best for listeners to get back in touch with you?
Yeah, so I'd say the easiest way would be, to reach me on Twitter at farmer_VC. LinkedIn is also, a means to get in touch, and look forward to meeting great entrepreneurs.
Great. We'll include those in the show notes. I want to thank you for joining us today, and hope to have you back for a follow-up soon.
Absolutely. Thank you, Hall. Appreciate you having me.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.